Hello traders, welcome back to the Forex Geek, where we dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to be talking about the moving momentum trading strategy, a powerful approach that identifies high probability trades in trending markets. If you are ever struggling with knowing when to enter and exit a trade during a trend, this strategy could be the solution you have been looking for. By combining key indicators like the moving averages, the stochastic oscillator, and the MACD histogram, you would learn how to pinpoint precise entry points with confidence. Stay with me until the end of this video as I will break down every step by step, so you can apply it effectively in your trading journey. Now let's understand what the moving momentum trading strategy is about. The moving momentum trading strategy works by identifying the market direction and capitalizing on temporary price correction as its core. This strategy helps you spot opportunities where price is likely to continue in the main trend after a brief pause or pullback. Let's break down the three key indicators that forms the foundation of this strategy. First, we look at the two moving average, the 20 period moving average, which is this blue line, and the long term moving average, the 150 period moving average. These moving averages act as our trend compass, telling us whether we should look for buying opportunities or we should look for selling opportunities. As we can see, the trend is being shown by the moving average. When the price is trading above the moving average, shows that we are in a buying opportunity. When it's trading below the moving average, shows that we should look for only selling opportunities. The second component is the stochastic oscillator, which helps us identify when the market is taking a breather. This indicator helps or becomes particularly useful when price pulls back in a uptrend or bounce in a downtrend. This is the pullback phase. This is what the stochastic is showing us at this pullback phase. It's showing us that price is below the 20 area. Finally, we have the MACD histogram. The MACD histogram, which serves as our confirmation tool. This indicator helps us determine the precise moment when a correction might be ending and the main trend is likely to resume. Think of it as a three-layer filter. The moving average shows the bigger picture. The stochastic tells us when price is stretched, and the MACD histogram signals when it's time to enter the market. Now let's look at how we can trade using the moving momentum trading strategy. Now we understand what this strategy is about and its key indicators. Let's discuss how we can actually trade using this approach. We will look at both long and short trade setup, detailing the steps you would need to follow in each trade. Now for a long trade setup, we have to first want to confirm that the market is in a bullish trend. This is indicated by the 20 period SMA being above the 150 SMA. As you can see, the 20 period is above the 150 SMA. The 150 is this yellow line, the 20 is this blue line. Once you see that, the next is to wait for the stochastic oscillator to drop below 20. When we see that, we wait for the stochastic indicator to drop below 20, and at this area of the market it dropped below 20. This is where it dropped below 20. Then we look at the MACD histogram. When we look at the MACD histogram, you would want to enter your long trade when the MACD histogram crosses below 0. You will want to enter when the MACD histogram crosses below 0. As you can see, it has crossed below 0 at this particular area here. The crossover confirms that the pullback is likely over and the uptrend momentum is resuming. As you can see, when it crossed over, we decided to have a push to the upside. Now, let's not forget risk management in this kind of setup. We have to place our stop loss just below the most recent swing low. Let's not forget we are trying to enter after we see a crossover in the MACD. In the MACD histogram, it crossed below 0. It shows that it's going to be over. We enter our trade in this particular area, and our stop loss should be dropped below the most recent swing low. This is where our stop loss will be dropped, the most recent swing low. This helps protect your capital in case the market moves against you. We also need to set our profit targets based on a favorable risk to reward ratio, such as 1:2 or 1:3 or higher. So this is how we will trade using this for the long trade setup. Now let's look at for a short trade setup. We'll look for a short trading setup. First of all, we have to ensure the market is in a bearish trend by confirming that the 20 moving average is below the 150 moving average. Let's look for a clearer example on this trade. From this trade, you can see the 20 moving average is below the 150 moving average in this area, shows a sign of bearish momentum. Next, we want to wait for the stochastic oscillator to move or rise above 80. The stochastic has to rise above 80. At this area, it rises above 80. At this particular area, as you can see in price, this is above 80. And if we target this up here, we can see we are still in a downward movement in the market. We have to check the MACD histogram. You would want to enter a short trade when it crosses below 0. You have to enter a short trade when the MACD crosses below 0. And at this area, this is where the thing crossed below 0. This line, this is a 0 line at this particular area. Where it crossed below 0, we want to enter our short trade at this area. This was the area that the MACD crossed below 0. Now we would want to enter our trade at this area. We'll enter it here. You want to enter your short position when it crosses below 0, signaling that the bounce is likely over and downward momentum is returning. Let's not forget the risk management for a short trade. We'll place our stop loss just above the most recent swing high. This helps to safeguard your investment if the market reverses against you in your position. Again, for the take profits, we aim for a profit target based on a solid risk to reward ratio of 1:2 or 1:3 or higher. This is how we target for our profits. By following this structured setup for both long and short trades, you can effectively utilize the moving momentum trading strategy to enhance your trading performance. Alright traders, we have come to the end of this video. Do well to engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on the notification bell so that you wouldn't miss out on more trading tips and strategy. Thank you for watching, and I will see you in the next video.